Yes, welcome dear students. In this session, let us learn piecemeal distribution, right? So when the term itself tells that piecemeal distribution, to whom? This is to all the concerned people to whom the firm owes certain sum of money or it has to make the payment of, right? So part by part, the piece means what? Part by part, the firm is going to make the payment because when firm wants to dissolve, the assets should have to be sold in the market. So all the assets cannot be sold at once. So that is why whenever, as and when the firm sells the assets, it receives a certain sum of money. So the same amount is utilized to make the payment of liabilities, right? So this system itself is called as piecemeal distribution. Let us come to the meaning of this. See, look at this. As and when money is received from sale of assets, it is used to pay liabilities. The liabilities are also paid in stages or gradually. The money, in short, is distributed piecemeal in stages and not in a single shot. So this is known as piecemeal distribution. It means the limited amount of cash is there. That is why all the liabilities cannot be paid once. So piecewise or stage wise or slot wise, the firm has to make the payment. So that's why piecemeal denotes something being done piece by piece or one stage at a time. In accounting, piecemeal distribution is a method wherein as and when money is received from sale of assets, it is used to pay liabilities in stages or gradually. So next, let us move on to the next slide. What is the order of payment to pay the liabilities? So this order is to be followed by the organization, that is firm. When it dissolves, it has to recover. First, it has to meet the realization expenses, then pay the government dues, that is tax. It may be GST or income tax. Then it has to make the payment to the salary, payment to the employees. If any employee dues are there, such as salaries, wages, provident fund, etc. And next, pay to third parties liabilities such as bills payables or creditors amount or any bank loan or partner's wife's loan, right? So such things should be made here. And fifth priority is given to the partner's loans, if any. And sixth one is partner's capital is to be paid by the firm. So this sequence is followed whenever the firm receives money. First, it has to give the priority to the realization expenses. It recovers. So accordingly, the amount is paid. Next comes the simple form of the earlier slide, right? So we will simplify the same slot. This is piecemeal distribution at the time of dissolution of a firm as first realization expenses is to be recovered, outside liabilities, then partner's loan, and last is partner's capital. Let us move on to what are the methods of piecemeal distribution of cash. There are two methods. The one is surplus or excess or proportionate, or it can also be called as quotient capital method. We can call it as excess capital method or surplus capital method or proportionate capital method or a quotient capital method. This is the first one. And the second one is maximum possible or notional loss method. So let us look at the statements under the first method, right? Statements should have to be prepared. That is, there are two statements should be prepared. Statement of excess capital, the first one. Second one is statement showing piecemeal distribution of cash. So